This is the September 2024 market update for the city of Parkland, Florida. But right now, the available home inventory, we have 162 single-family homes for sale. And, obviously we're getting closer into that COVID market where inventory is definitely increased. September of last year, we had 97 homes only for sale. So we have a 40% more inventory right now. So as a buyer, you have way more houses to look at. And as a seller, you have way more homes competing against you in this market right now. So we are, used to be a seller's market, and now we're trending more towards close to a buyer's market. So looking back to the month of March 2020, that was the COVID month, the stay in place month, we had 182 homes for sale at that time. So if you look at right now, we have 162. We're not that far away from that pre-COVID market. So keep that in mind. If you're looking to make a move as a seller, you will have a little bit more inventory competing against you. But as a buyer, when you sell, you will have a lot more homes to look at. So it's kind of a catch-22. Closed sales, September 2024, we only had 39 closed sales for that month. For last year, we had 50. So we definitely had 22% decrease in the amount of homes that sold in the month of September. And then obviously homes start to sell less as we get closer to the end of the year. Obviously we're getting into the holiday time. We actually have an election coming up. So, people are a little bit in the, let me jump back on the fence mode. And that's historically happening. It's not a major trend. I'm not super shocked by that. But I wanted to point that out. So the median sales price for September of 2024 is down to $980,000. We're typically in that 1.2 million. The median sales price for last year at this time was $1,158,000. So we've seen a decrease. I think it's just the month of September. We did our last month. It was closer to 1.1 plus. So I just think it's one little hiccup in the market statistics for 1 month. I don't use 1 month for the whole year, but certainly you see that it's trending a little bit down. During the March of 2020, during a COVID stay in place month, the median sales price was only $700,000. So even for a lower month like September 2024, we're still 29% above that. So everybody has a lot of equity in their home if they had a house that they purchased anytime in 2020 or earlier. The median time to contract, meaning what's the absorption rate in Parkland right now? It's still very good. We have only 42 days on market until a home goes under contract. Last year, it was 28. So there is a 33% increase in time on market. We have more inventory. It's going to take longer for you to sell your house. Month supply of inventory for September of 2024. This is how long it would take if there was no other homes put on the market and we have the active listings we do, how long it would take to sell if no other homes were based on the last month's sale. We have a 4.15 month supply of inventory for September's month. Last year it was 2.5 months. So that is a 40% increase in the month supply of inventory. So we're right in that middle market of maybe not being a seller's market, maybe not being a buyer's market, but we're trending more to that buyer side, which is definitely causing some distractions and corrupt, changes into the real estate market where people are able to not have to overpay for houses and waive inspections and appraisals and, buy houses that they don't truly love. So those are the changes that we're seeing in the market. So what does this mean for you? So as we're getting closer to the end of the year, understand, as I said, the trend for so many years has been, as we get to the end, the market does slow down. We are in an election year. It is shown historically the market does slow down. It historically picks up right after the election, whoever wins, because people are back on the idea, well, this is going to be the president, this is what's going to happen, and we are going to feel comfortable moving forward because at least we know it's over. This whole debates and political stuff is done, so they're ready to move forward, and I will see rates go down. We are going to see mortgage rates decrease as we get closer to next year and into the summer selling season of 2025. So if you're looking to make a move, it's really important that you could still sell your house. Sell it first. Get a post occupancy. Sell it, stay in the house, get a buyer to negotiate that with you. And then you have so much inventory to look at. You have 40% more homes to look at if you're staying locally in Parkland, and a lot of the trends are similar in other cities. And then you're able to get your dream home and have a contingency. If the rates go down and we have more buyers in the market, you might not be able to have your cake and eat it too. So please understand this. This is what we're telling our clients that we meet at open houses, that come to our websites, that calling us to list houses and they want to buy with us. So these are the things that you need to have. And we have our pulse on the market. We love to be able to educate you and give you this advice. And now let's go over mortgages with our preferred lender at Supreme Lending, Joe Palopoli. So now we're going to go into the mortgage information. So we have Joe Palopoli, our preferred lender for Supreme Lending, coming here to provide some insight. And we're going to do this on the morning mic every month moving forward. So today, according to Mortgage News Daily, we have a 30-year fixed loan at 6.62%. We have a 15-year fixed loan at 6.07% and a 30-year jumbo loan at 6.74%. So I wanted to give some insight that October of 2023, this time last year, rates were in the high sevens, exactly 7.94% for a 30-year loan, which is 1.2% decrease from year over year, just from last year. So what do you think of that rate right now from last October, where we saw rates get almost to 8%?
Well,
now?
And rates are even a little bit higher since 3 weeks ago when the Fed cut the Fed funds rate, so they were even much lower than that. So
like a point and a half.
Yeah, so they were even lower. It's all in the economy. With the Fed lowering the Fed funds rate, it's a short-term rate. Banks charge each other, so everyone thinks right away that long-term interest rates are going to go lower 0.5 point.
We hope.
And as we know, as we discussed, today's rate is actually higher than it was 3 weeks ago when the Fed lowered the Fed funds rate. So
starts high, gets low.
Starts high, gets low. Historically, since 1984, every time the Fed made that first cut, long-term interest rates went up over a short period of time and then started trending lower. But today's rate is better than it was last year. So
we're getting into that.
We're getting into that. Yeah.
What do you think the rate outlook would be as we approach 2025? Like obviously we're getting into our final quarter here. We are in it, and obviously we have election coming up. Right. And then next year in the beginning, everybody says rates, as you said in our class earlier, rates are going to go up a little bit now, and then they're going to go down. Yeah. What do you see the outlook overall from the beginning of the year to maybe the fourth quarter?
Well, I strongly think long-term interest rates are going to be lower than they are today. The $1 million question is how much lower. It's what drives interest rates is the economy and inflation. So the big market movers with interest rates in any one month is the BLS jobs report, which comes out the first Friday of every month, the consumer price index, the producer price index, and then the Fed's favorite gauge. When you see Jerome Powell standing up there, our target is 2%, 2%, 2%. It's the personal consumption expenditure, the PCE. That's their gauge. And those numbers are released every month. So and they're trending lower. If they continue to trend lower and there's no, unexpected jumps up, we're going to be, probably in the low fives and maybe even high fours by, this time next year, because they could change. Look what's happened in the last 3 weeks. They've changed almost 0.5 point in 3 weeks.
Fluctuated a lot.
In 3 weeks.
Well, we're hoping for that.
Yeah.
I'm thinking more spring market will be different next year than it will be this year.
Yeah, definitely.
So what kind of mortgage programs do you see different? Like what is the most popular product you see now and maybe getting into next year that buyers should be aware of? What is something different that you see?
Yeah, well, I think right now for a regular Fannie Mae, Freddie Mac conventional loan, which now the new limit are loans under 802,000, it's the 30-year fixed.
Okay.
Because the yield curves were inverted, that there really was no market for the adjustable rate mortgages. There was no spread. In most cases, those rates were higher. But with the jumbo market, there is a spread between a 30-year fixed and an adjustable rate mortgage. So on the jumbo side, loans, above the 802 or 1 million or whatever,
that's what we're dealing here.
which is Parkland based, those are the 5-year ARMs because that rate, it's about 0.5% difference. In rate. So that makes a difference in $1 million or $1.5 million. So that is the most, so it really depends on the product. And then if you're doing any type of government loan, an FHA or VA, again, that's going to be a 30-year fixed.
What about inventory levels? Obviously, we've seen inventory levels pick up. They're not at any sort of pre-pandemic yet, especially out here.
Right.
But we're starting to see more inventory come. Things are selling. Prices are going up. They're not going up like they did, during the COVID months.
Right.
But what do you see in that trend for inventory for buyers and sellers into 2025?
Yeah, I think inventory is up. There's more inventory than obviously than the buyers, but
Sure.
inventory from historical levels is still historically low. I think the numbers are pretty much around 1.3, 1.4 million listings nationwide, which is a super low number.
Yeah, we don't have a lot.
When you're getting into trouble, you're talking about 5, 6 million listings, 7 million listings to have a buyer's market. We're not even close to that. And, I just think as we approach the end of the year, if rates do continue to start dropping, you'll see that inventory start drying up a little bit, but it's going to drive up prices.
What about,
it's going to be more demand.
Sure. What about, why should a buyer buy now and not wait? Because obviously, if you wait, maybe the rates might be a little lower come spring of next year.
Yeah.
Why should a buyer wait? We've been telling this for years. When's the best time to buy?
Right. Now.
It's true. And we have the stats to prove it.
And for basically what I just said, that, as rates drop, inventory levels are still, pretty much historically low. They might not be moving as quick, but they're not growing in leaps and bounds. And
they're
as
not
rates,
going down.
Right. And as rates drop, there's going to be more demand
and prices
more demand and prices are going to go up. So yes, you can have a 6.5% rate, at 1.5 million, or maybe that house next year is going to be, 4 or 5% higher at a lower rate. But, why, start building wealth today? You could always refinance.
Sure, that's true.
You
can't refinance the price.
Right,
You can only refinance the terms of the loan.
Yeah.
What about, if you're, do you feel and believe the current market conditions favor buyers? Do you feel like it's going to, I feel a little shift that it's not an overall dominant seller's market, and it's not an overall dominant buyer's market right now. So we're kind of in that, we just looked at our stats here. We're at a 4+ month supply of inventory, in Parkland, Coral Springs, give or take 3 to 4 months with the local recent trends. Do you foresee, because we know a 5-month market of supply, the absorption rate, it's going to be more of a middle market, not a buyer, not a seller market. Once you get into 6, it becomes a buyer. So we're on that cusp. Do you feel with rates going down, which we, you and all the other, experts we read online and we watch on TV, they're all saying the same thing, that rates will come down, start high what will that make the market in your opinion?
Well, I used to be an appraiser. I was an appraiser for 9 years. So on the appraisal, the marketing time, the definition, if a house is on the market for less than 3 months, it's a seller's market.
Okay.
A normal market, which we were in, pretty much my entire career, is 3 to 6 months.
Okay.
Those days, a lot of people don't remember. That's a normal market. And then anything listed for 6 months or more ends up being a buyer's market. And typically that's when your property values are dropping. We're far, far, far away from anything like that ever happening. So, having a normal market, a house being on the market 3 months is normal.
Sellers
what we've had the last 4 years is not normal.
Sure.
And what we had in 15, 16, 17, 18, and 19 was 3 to 6 months.
Correct.
That was normal. We're just getting back to normal. So, and inventory levels, even if they did increase, it's just going to be normal inventory levels to where they were pre-pandemic. So it's looking strong. It's a great investment.
When a lot of people right now, we talked about this earlier during the class that you gave every month that you're coming in, what are people's perspective if they're looking to buy, but they have to sell first? You were giving some stats and insights.
Yeah.
That's kind of like a lot of the people we're seeing coming to our open houses, reaching out to us about new listings. They're on the, all the algorithm websites, and they're kind of, floating the idea that they want to move. They want to get the urge. A lot of people want to move, but a lot of people can't move.
Right.
So what would you say to that audience that's really listening, that wants to make a move, and most people need to sell to buy nationwide?
Yeah. I think one of the main reasons people have to sell is, the equity position that we're sitting on in America. It's super high. Everyone has tons of equity. And everyone wants to take that equity and put it towards another house. You know, whether they're looking to upgrade, you know, into a bigger house, they want to take that money and put it towards. So, you know, I do a lot of pre-approvals with people wanting to say, all right, can I buy without selling? What are my options? And then ultimately when you're digging in and possibly getting a bridge loan to tap into your current equity to use, you might have 3 mortgages when it's all said and done. You might have the mortgage on your current house, the mortgage on the new house, and then the bridge, you know, the down payment bridge. And that scares a lot of people. So, I mean, my advice is that, you know, during the history of time when people said, you know what, let's buy a new house. What's step 1? List our house.
Sure.
I think that's,
I didn't think about
I
that.
think that's what you need to do. You know, listen, you know, it works out. It's been working out for years and years and years that you'll sell your house and you'll take the equity and you'll purchase a new one and it all works out. It might be a little hectic with moving, but it works out in the end.
I've been telling people to trust the process. And for
Right.
Philadelphia,
the process works and has been for many, as long as I've been doing it. Right.
I mean, even if somebody can do a bridge loan, they still want to maybe get that house. Go throw their house on the market right after they go under contract with their new purchase and they pass inspection, and then we're running to get it sold, and then we have a date in mind, and then they're removing the bridge loan.
There's people out there that can afford the 3 mortgage payments, but those same people don't want 3 mortgage payments.
I mean, there's some people that refuse to move unless they buy before selling. And those people in that economic position,
you have to trust the process. The process has worked for years and years and years and years.
And the insight you're giving, which is very informative about the rates going down next year, if that happens, all the trends are showing that by the spring of next year, we're not going to have the frenzy of 100 people lined up in front of houses, but you're going to have another multiple buyer situation. If rates could dip into the 4% or even the low 5s, that's what statistics show.
That's what they show, yeah.
And at that time, you might have trouble selling your house first because that seller of the home you want won't do a possible contingency. Now they're still doing them. They're not as unpopular.
Well, I always throw that question to the, you know, when I'm doing the pre-approval to the seller. Listen, as a seller, if someone makes an offer on your house and they say, well, I got to sell my house, are you going to accept it? They're like, well, no, of course not. But you want to make an offer on a house subject to
But the seller who
I guess I don't
wants to be a buyer, they negotiate that. They're able to do that right now. And as we're getting into the end of the year, statistics, not about, you know, statistically when we have an election, the market does slow down. Though people are just kind of seeing what's going to happen. But statistically, after an election, no matter who is the winner, the market does pick up in the last, you know, I think 9 or 10 elections. So buyers will be very proactive with that in mind, as well as, you know, during the holidays, people don't want to have their houses on the market. They're traveling and Thanksgiving and Christmas, Hanukkah, Kwanzaa. They want to take a step back and then they get right back in the market. So if rates do go down, we will see this influx of buyers and more people getting pre-approved. So I feel that we're looking at partnering with the idea of selling a house, getting your mortgage information. I see a lot of our clients that are working with you. They are selling. They are trusting the process. They are doing this the old school way with the new school technology. And then they get their house under contract. Maybe they get a post-occupancy, so they have some time to really solidify a property that they might have seen. Or maybe they pass inspection, appraisal. Maybe they feel that the reward outweighs the risk a little bit, and they'll throw their hand into it.
No, I've had a few where their house is under contract and their buyer has gone through the appraisal phase and the inspection phase, and they've got the loan commitment, and that just makes their offer stronger. So not only are you saying, here's the contract on my house, here's everything else, that worked pretty clean.
And you can speak to the lender.
And you're, you know, and it's working. But, you know, step 1, no matter what, for most buyers, is list the house first.
We're in the playoffs in baseball. I tell people it's like baseball. Got to get to first base before you go to second, third, and round home. So I think this is informative because people need to understand this. We deal with it every day. And when buyers are coming to our open houses, our team here at Parrot Realty is being so proactive in giving this knowledge and turning it over to a great lender like you that's able to give this information, to give them the options. As you said, some people can carry.
I'm just laying out the options.
Some can carry the 3 loans.
And it's up to them to pick the best option. And for most, you know, having the mortgage on their current house, the new house, and the bridge is a lot.
I mean, it's 100%. With rates being what they are,
it's a big payment.
Still,
because then what if my house doesn't sell? What if it takes 6 months to sell? What if, you know, what if
makes it harder on us?
It's a lot of pressure, and
but that's the right way to do it.
I don't want 3 mortgages.
No. You also want to make sure your wife's happy,
Right.
and she gets the home of her dreams. So when you
Yeah,
have your house under contract, that you don't buy one you don't
Right,
like.
I get it. Someone knows.
Because
I don't
that
want to
happened during
mortgage.
COVID. People were, but the deal was the house, and so a lot of people from 2020 to even last year bought houses they might not have loved. I always say the 5 must-haves. Maybe it was 2 out of the 5 or
Right.
3. During COVID, it might have been 1 out of 5.
Yeah.
Now you can get almost 4
you
to 5
get
out
your
of 5
house.
by listing
Absolutely.
your house and still doing it
Right.
the right way.
Right.
Get it under contract, have a post occupancy. You could go to a temporary rental. There's Airbnbs.
Right.
I have a client
Especially this
sold and
area,
did that.
Coral Springs, Parkland. It's a highly desirable area.
Correct.
They're
We're
moving.
still gonna-
Inventory is moving. So
I tell people when people ask me about the market, I've been in the business that long. Now I'm becoming one of those agents that I used to say I looked up to.
when I started,
Yeah, when I started, because I used to say people, and obviously before the wedge was built in Parkland, that new construction wasn't there. But at that time, when the market crashed, people would ask me, well, what was the market like? In other cities, I think like Lighthouse Point got affected the most. They had like 80 to 90% of their active listings were short sales and foreclosures. We called them distress sales.
Right.
People would ask me, well, what was Parkland looking like then? We had way less inventory.
there was
less
less.
homes.
Less homes, right?
So the idea was people asked me, what was that market looking? And I'm like, well, I was there. I can give you an insider information because that market was only about 20 to 25% of the homes in Parkland.
Right.
And it was a little bit higher in
Yeah,
Coral
I think
Springs.
the population might have been around 30,000 people back then.
Correct.
So,
But the difference was we had way less supply of inventory that was distress sales because people who moved to these cities out west where there's good school districts and safe environment, they're paying premiums, and they are today. I mean, look at the median sales price, and
Right.
we're over $1 million+ here. That is getting them to not just buy into the investment of real estate. We talk about the wealth sheets you put together for our clients, but it's also about the lifestyle wealth. I
Right.
always say the lifestyle wealth is always worth more than anything else, and that's what you get in cities like Parkland, Coral Springs, Broward County area.
Right.
So I think these are the things that we're going to discuss on a monthly basis, and I want the public to ask questions. We want to bring some unique situations to you.
Yeah.
We're going to have our agents bring some different scenarios so that you can educate the public, because what we want to do is be able to make people feel comfortable with this buying process whenever they are ready to do so. If they're going to do it before the end of the year,
Yeah.
what's the benefits? We'll talk about that next time, as
But
well as next.
Even
next
if they're
year.
going to do it at the end of the year, the first quarter of next year, or even next summer.
Sure.
Why not know what your options are today?
I mean, all the data we're learning. I mean,
know?
I'm becoming I could run for the Fed chair maybe. It's funny to say because I know what they mean, and we have to do our meetings after this all comes.
What's the
about.
target rate?
No. It's 2%.
You're on.
It's 2%. 2%. We won't forget that. So thank you for coming on.
You're welcome.
This is great information. Please like, share, ask questions for Joe and myself. Whatever you're thinking about making a move, you have a great lender that can give you insight. And look, we're just looking to give valuable information. We've been doing this I've been doing it for over 20 years. Joe, you've been doing it for almost 30 years?
Yeah.
Oh, gosh.
Yeah.
I'm catching up. So we'll see you for another episode here on the Morning Mic with Joe Palopoli. Thank you for watching, and we'll see you next time.